Hi, this is Paul Slack. It's Good News Planet. I'm speaking to Michelle Thornhill. Hi, Michelle. How are you?
I'm doing good. How are you this morning, Paul?
All righty. You're the Senior Vice President, Diverse Segments at Wells Fargo, and we're going to talk about an extraordinarily important subject, which is Smarter Credit Month. Helps set consumers on the track for financial success. We're going to learn about credit and how to maintain your credit, and this is a subject you really want to pay attention to. Because if you ever had any difficulty, you've ever had any questions about your financial condition, and you've gone to get a mortgage, you've gone to do anything, it's a mess. So you want to know what to do here because it can actually, in essence, through life experience, it can change your life. You could not get it just because there's some confusion on your credit scores, and Michelle, I think, is going to help us here. Are you with me?
I'm here.
Okay. If you could share.
Yes. So Wells Fargo is participating today with the American Bankers Association Education Foundation Get Smart About Credit. Credit is important for all consumers, whether you're just starting out, whether you are already established and you're looking for ways to manage your credit. This initiative allows us to really talk to consumers about understanding what's on your credit report. Looking at your understanding your credit score, what lenders look for when they're considering you for a credit card or a loan. Also establishing or protecting your credit. So all these are topics that are important to consumers, they're important to college students, and we're glad to be here today to talk about that.
Okay, very good. So what are some things that people should understand and know about credit?
I think the first thing is that people should really, if they have credit, know what's on their credit report. By law, consumers can get a free copy of their credit report at annualcreditreport.com to look at who they have accounts with, whether the balances. I think definitely keeping on top of your balances, interest rates, really trying to pay down the debt is very important, especially as we've come out one of the worst credit crises or financial crises, hopefully, of our lifetime.
Okay. So when you get that credit rating, and usually it's from three different sources?
Yes. There are three major credit reporting bureaus, TransUnion, Equifax, and Experian.
Okay. And then you see something on there that you don't even know about. You never heard about it in your life, and it's there. And they say, this is something, you maybe switch the phone company. I think a lot of people have told me over the years that sometimes utility situations that you're not even aware of. What do you do?
You have an opportunity to go back to the credit bureaus, dispute any information that's incorrect or you're not aware of on your credit report. The credit bureaus then have an obligation to work with the creditor to research and determine whether it's a debt you owe, and if it's not, then that will be removed from your credit report.
Did you say that the research bureaus have an obligation?
Absolutely.
I've never heard of that one. I thought it's like on the person with the credit rating has to go back to the phone companies or the whatever companies.
No, it's
argue
on the,
with them, try to get a piece of paper from them, and then send it to them.
I mean, if the credit bureaus go back and let's say the phone company or the utility company says this is a legitimate debt, then the consumer can go back to that entity, and then that's where they're having that conversation, trying to clear it up.
So literally, you can go to the three credit bureaus and say, somehow through some mechanism, 800 number or a written document.
A written documentation. You can actually a lot of them you can also do it online now, but writing them back and saying I got a copy of my credit report. I noticed these 2 items or 3 items are incorrect, and then they will go back and research and come back to you. And there's usually a time frame for them to do that.
Really? Okay, that's very good to know. I didn't know that. People I know didn't know that.
Yes.
All right. Well, then that's very important. Now, how do people, though, now they say they have debt, and in addition to some credit, first of all, in life right now, if your score is under a certain amount, it's going to be very hard, I believe, to get credit. Is in general, to get refinance a mortgage and things like that, you have to have what, 720 or something like that.
I think your credit score. There's certainly a range of credit scores. I don't think you only have to have a 720 to be able to get a mortgage or any debt. I think the higher your credit score, the better chances or opportunities you have to access or obtain credit. I think it's really for consumers to, one, understand what's on their credit, to pay their bills on time. I mean, that's the most important thing that really impacts your credit score, and really to not overuse the debt, not overextend yourself. So I think if we really focus on those two things, then consumers have a better opportunity to improve their scores and then determine what's best for them, whether it's buying a home or getting a credit card or applying for an auto loan, what's best for their situation.
Do you lose points by even asking for your credit score?
You don't lose points by asking for your credit score. Credit score, the factors that you're looking at: do you pay your bills on time? How much credit you have? And then when you apply for new credit, I mean, I think it's important to not go and overextend yourself and apply for, whether it's for store credit cards or any type of credit card. But you don't lose points for really understanding your financial picture, and I think that's what we're really talking about. At Wells Fargo, we have a new site that we've launched called the Smarter Credit Center, and really consumers can go there and find out about really understanding your credit, how do you protect your identity, really what are lenders looking for when they're going to issue you credit, and we call those the 4 C's of credit. So there's some great tools online to help consumers really better understand their credit, and I would definitely encourage our viewers, our listeners, to go there.
What are 4 C's? What are the 4 C's?
The 4 C's are credit history. That looks at your willingness to pay. Your credit report, your credit score is a good indicator of your willingness to pay. Then there's capacity. Do you have the ability to pay? That looks at your income or your sources of income. Then there's collateral. Some, depending on what you're applying for, whether it's a credit card or auto loan or mortgage, lenders require sometimes a form of collateral to secure that loan. And then the last thing you have is conditions. What are you going to use the funds for? And then what's happening in the economy?
I'm sorry.
No, you're good.
It's very wise if you do have credit and use cards, or you have an expense, to at least pay the minimum balance, right? Isn't that like mandatory? Because if you don't, then you're really in trouble.
I think it's the minimum balance is what you have to pay in order to meet the obligation of paying that bill on time. I certainly would encourage consumers to pay more than a minimum balance if they can, because it creates an opportunity for them to pay down that debt or pay it off. And I think really all this goes back to, how do we manage our credit, but also budgeting, really understanding what you have coming in versus what you have going out, and really trying to look at ways where you can pay down debt versus carry high levels of debt.
During the holiday season, of which we're vastly approaching here, people spend probably more money than they normally do during the year to buy gifts and so on and so forth. What do you suggest for them? I know by January I'm a hurting puppy.
Yes. First of all, it's to set a budget for your holiday spending. Certainly, paying for gifts on credit that you're going to take a year or two, you would have bought those gifts over, 3 times over if you just pay the minimum payment. So I really think it's important for consumers, before we enter into the holiday season, and we're almost there, to really look at how much can I afford to spend this holiday season. And sometimes, for some families that may be $500, for other families that may be lower, but it's really about understanding what you can afford and then adjusting your spending to that.
I like to save a percentage of every paycheck. Good idea?
Absolutely. My goal, idea is really to start with something. For some, it may be $25. For others, it, may be a percentage. I think it's important to get in a consistent habit of saving and paying yourself first.
That's a good one. That's a good one. You have very practical, very solid thoughts here. Thank you for sharing them. Last quick question. What's good news for you, Michelle?
Good news for me is that we are really providing the education, the tools and resources to help consumers make informed decisions that will allow them to achieve financial success. So I definitely would encourage our consumers to go and visit wellsfargo.com, our Smarter Credit Center. We have 4 new Smarter Credit videos that we have released on YouTube. So it just creates an opportunity for consumers to be informed, and that's what's most important.
Great job. Michelle, thanks so much for sharing good news with us.
Thank you so much, Paul. You have a great day.
Take care. Bye-bye.
Bye-bye.